Welcome back to Watching Business Incorporated on Channels Television. We now head to the markets now to look at intraday numbers. Aniti Edit is here with those numbers. Aniti, good afternoon.
Yes, good afternoon, Ini. Okay, so yesterday we saw the market, the all-share index of the NGX crossing 101. We've seen that number sometime earlier this year, and it's so nice to see that number coming in at a time when you say, okay, Santa rally, we should be expected, and I'll look out for Santa rally, but at intraday, that number was not promising. Okay, so now let's take a look at the screen here. 100,000. Yesterday we saw this number at 101, above the 101,000 points, which was up by about some 0.77%, with in value about a 467.11 billion was gained. But so far at intraday, this market, the number is retreating. This is about 1 hour ago where we saw the market pull back by 0.41%, intraday market numbers, and then these numbers are still going back and forth. But we hope that it will be able to get back to that 100,000 points, 101,000 points. But so far, this is how the market closed. Yesterday, we also saw that the likes of Ardell and 45 other gainers were the one that advanced the market. So far, month to date is about 3.8%, and year to date is 35.41%. So the market is not, the domestic stock market is not doing pretty bad, to be on the safe side. It's actually among the top 20 best performers for 2024. And so far we have just about some 6 trading days left in the month of, in the year 2024. For most of the markets that we track around the world. For the Johannesburg Stock Exchange, at some point we've seen the number climb to about 87,000, but it has retreated to about 83,969.00, last track 0.59% in the red zone. And for the other markets, most of the markets, it was slightly a mixed picture. For the close of Thursday's trading session, Nairobi Stock Exchange All-Share Index, that's for Kenya, was down 0.86%, but so far it's been able to cross into the 120 index points, but that's one of the lowest when you take a look at the numbers and you do the contrast. All the other numbers here that you see are above 30,000, 20,000, but this is so far the lowest. And then the lone gainer there was a 0.08% increase on the side of the EGX 30 at 30,526.71. So that's a snapshot of the intraday market numbers for most of the major markets on the African continent. And so now from the equities markets, let's talk a bit about the fixed income markets, where we're going to do a review of this week and what to expect in the holiday thin trading session next week. We're going to be having just about 3 trading sessions for next week. But so far, for the fixed income market, at the bonds market, it was a bearish close for Thursday, and for the T-bills market was bullish, and for the OMO, it wasn't a bearish close for that market. But to give us more insight into this market, let's talk with Kola Komolafe, fixed income dealer with Access Bank. Thank you for joining us, Kola.
Hi, that's compliments of the season.
Okay, so now my first question will start with the yields. How have this different, the yields, maturities across the short, medium term and long term, have they moved this week?
Yeah, so this week that has been relatively unchanged, really. It's been a very calm fixed income space because, it's the yield-tide period, so it's been quite calm. So we've not seen any change in the yield curve, but it hasn't really moved much, because you're seeing that investors or players in the market are basically just waiting to see cross over into this week the budget was presented, and then there's a significant deficit that will need to be financed from the fixed income market. So you see that market players are just waiting to see what would happen there, because it seems like the high yields that we currently have on the fixed income space will be something that would continue. So this week it's been relatively just calm.
Okay, so what are the implications of this movement for the economy and for investor sentiment?
Okay, so what we've seen also is that investors are pretty much confident, or they prefer to play in the short-term space. So because there's a duration play there, you wouldn't want to lock in yields or rates for a very long term when there are expectations that yields could even go higher next year. For the NTB market, you have about 5 trillion naira that would mature just in Q1 alone. And I'd mentioned the deficit that will need to be financed from the fiscal side. So you would see that there will still be a lot of significant borrowings, and then yields could even go higher. So investors are just preferring to play in the short term space so that as it matures, they can reinvest at much higher yields.
Kola, I think because of time, we just have to leave it there. But I know that there's going to be a Treasury bills auction next week. It's supposed to be on Christmas Day, Wednesday, but that'll be on Thursday. So we'll talk more about that next week. But so far, let's put it there for the close of for Friday's trading session.
All right. Thank you for having me, Adet.
Okay. That was Kola Komalafe, fixed income dealer with Access Bank for the market numbers of the fixed income market. Okay, from Africa, as usual, to the Middle East, where we see mixed sentiments here. Only these two, which are trading for Friday, were in the green. And so far, we see lots of bargain hunting from investors across the Dubai and the Abu Dhabi index, both on the United Arab Emirates. 0.66% and 0.55%, quite a number that you can see almost matching on both sides of the indexes there. And for the flip side of the market, for the close of Thursday's trading session, we see the Saudi Arabia and the Qatari Stock Exchange both closing that day in the red. So they'll be resuming on Sunday. So far, this is how they close for Thursday's trading session in the red, 0.57% and 1.13% respectively. And from the Middle East, we move over to the United States, where we see most of the markets, they were in the red. This is coming as investors are expecting the personal consumption expenditure index report, which is the U.S. Fed's preferred inflation gauge. And this is coming after the U.S. Fed had announced its last interest rate cut on Wednesday, which was another 0.25% cut. So, but now this time, the investors are actually awaiting the release of this PCE index report, which is expected to come in at to rise by about 0.2% on a month-to-month basis, and then on an annual reading, it's expected to be about 2.5%, which is actually higher than what the Fed is already forecasting. But so far, for the Dow Jones Industrial Average, 42,000, it has climbed. At some point, we're celebrating the 40,000 level, but so far it has crossed into the 42,544 index point, but in the red for ahead of the opening bell, 2:30 Nigerian time. So it is down about 0.59%. And for the S&P 500, it's also red, 0.80%. The NASDAQ Tech Heavies, 1.15%. Overnight, we saw the Dow Jones it was already in the red, maintaining about its longest losing streak since 1974. But so far, it was able to go in the gain territory. But for more details of Thursday's trading session, let's bring in our Washington correspondent, Maria Bird.
The U.S. stock market slightly rebounded on Thursday as the Dow Jones was up at 0.04%, cutting a 10-day losing streak. And the S&P 500 was slightly down at 0.09% down. And the heavy tech NASDAQ was also slightly down at 0.1% under. This is clear that the U.S. stock market is responding to what many consider a hawkish interest rate cut at 0.25%. The Federal Reserve is stating that there will not be any interest rate cuts in 2025, and if there are any, there'll be very few. This is due to the fact that many are expecting inflation to continue to rise. This concern by the U.S. stock market has many wondering what will happen before the end of 2024.
Our Washington correspondent, Maria Bird, giving us details of the trading session for Thursday on Wall Street. And finally, for the Asian markets, we see another red. So far, all the markets have been battered, and this is due to an array of factors there. First, we see from the Nikkei, which is Japan, it has retreated from 39,000 points. And this is coming as the country released its inflation number, which came in higher at about 2.9% in November against the 2.3%, which was last seen in October. At the same time, we also see China announcing that it has kept its interest rate unchanged, leaving the one-year rate at 3.1% and the five-year rate at 3.6%. So far, we've had about 4 interest rate decisions this week. We've had from the Bank of Japan, the Bank of England, the US Fed, and now the People's Bank of China. And so far, the Kospi is also in the red. Kospi, that's from South Korea, had been in the news so far, and it wasn't too good news. The market had actually been slammed and made some gains, but so far, for the close of Friday's trading session, it was down 1.3% at 2,404.15. For For the Hang Seng Index, it's also down 0.16%. And for the China Stock Exchange, where we see the Shanghai as well as the Nifty 50 India, all in the red, 0.06% for Shanghai, and for the Nifty 50 down a whopping 1.52% for the close of Friday's trading session. So, all the markets are bleeding for Friday's trading session.
Yeah, even the crypto market is bleeding. I believe the revelation by the Fed that next year is not going to be a lot of soft landing. You know, I think that is a major driver.
So Jerome Powell's announcement actually slammed the markets. So investors are actually kind of like wary. At the same time, the economic factors which is coming into play across many of these countries is also having an effect on
especially China.
Stocks.
Thank you so much, Anita.
Pleasure.